Hi guys, it's a billionaire here, Bliss $1 billion, your forex coach, and I wanted us to have a recap on the price action patterns that we learned. We talked about the reversal patterns, so today I'm going to quickly talk about the reversal patterns, then talk about the continuation patterns. I felt there's some information that I left out, and I should mention it in this video. So the way it is, we're going to start with the double bottom. So a double bottom gets its name because it has, let's assume this line is price falling. You can see by the formation of candlesticks. Let's assume these are candlesticks. It has the first touch here, goes up, starts coming down, and it has the second touch here, and it starts going up. So now, by having these two touches here at the bottom, gives it a name called double bottoms. So the other thing that we have to know is the neckline. The neckline is initially where the center of the W is. The double bottoms are sometimes called the W formations. Yeah, and where this W is, where this peak is what forms the neckline. So this point is a neckline, and this is the point of the double bottoms. So now let us see how to properly trade it. Basically, maybe this information has been there. Your first mentor first told you about this and all that, right? We don't care. We're gonna learn something advanced, but we're going to start with the very basics, right? Yeah. So basically, here is how you trade the double bottom. So you have to ensure that as price is coming back down, you have to be waiting for this particular point. Once price is there, you enter. Once you enter a buy, put a stop loss here. Now, the double bottom gives us two opportunities to buy. If at all you miss the first buy here and price is somewhere here, what do you have to do? You simply wait to have a breakout. A breakout happens when the neckline is passed. When price passes the neckline, then once it does that, all you have to be waiting for is for price to come back to this neckline, and you enter a buy, boom, and it goes up. So now, with this pattern, I'm going to show you the two types of entry systems that we utilize when we're trading using the patterns. So there's the risky entry as well as the less risk entry. So let's start with the risk entry. So the risk entry is where you enter from here. Now, why is it called the risk entry? It's because we do not have a lot of confirmations to enter a trade from this particular point, right? But then the less risk entry is where you have a retest at the neckline. So we have what we call a reversal pattern, then it has been retested on the neckline and we enter a buy. So it is less risky in this regard. So where do you put your stop loss? You're going to put your stop loss once you enter here, first buy, you're going to put your stop loss just a few pips below your entry. So you enter the first buy, second buy, right? Besides that, so if you entered, because there are sometimes when you think it is going to be, your price is going to continue going up, and price fails to break this neckline. So what do we do in this case? We're going to modify how we trade the double bottom. So what are those modifications that we're going to put? When you enter your first buys from this zone, you put your stop loss and you're going to take your TP at this particular point. Once you take profit at this particular point, you can wait for another entry to go with it up. So now we put our TPs here so that if anything, if it fails to break and it starts coming down, at least we'll exit with money, right? So now the advantage of taking the risk entry is that it offers a good risk to reward. So you can be risking maybe $20 and you might be gaining maybe $100 or $200. That is a very good risk to reward ratio. So now when we trade the less risky entry, the risk to reward is not very good, although it is okay. So you find that the way people trade this double bottom is that they will still put the stop loss here. But what we're going to do is I'm going to show you a method whereby you put, first you have to determine the, the middle point, the equilibrium of the neckline and where the double bottom is. Once you determine the equilibrium, then just a few pips below it, that is why you put your stop loss. Let me just try to, let me try to illustrate this. So what I'm trying to say is you measure the equilibrium. I'm going to show you how we use the tool that we use and all that once we go on the charts. And if you determine to say this is the equilibrium, if you determine that this is the equilibrium, so just a few pips, that is why you put your stop loss. So you put your stop loss here. So what have we done? We have reduced the risk. Instead of putting the stop loss here, since we're entering from here, instead of putting the stop loss here, we've reduced the risk by putting it here, right? So you might be risking maybe $20 and you might gain maybe $100 and all that, right? So it's that easy. Now, where do we put our TP? So we put our TP, this is what we do. You measure the distance from the neckline to where the double bottoms are. So the same distance is where you're going to start measuring from here and wherever it will reach, and that is where your TP should be. So for instance, if this distance has been measured and you transfer this distance from here to there, that is where your TP2 should be. So your target, the first target would be here, and the second target should be where the distance that is equal to this is, right? Yeah, so let's move on. Okay, let's move on. Okay, sorry, okay. Yeah, so we've discussed this. So the next one is the double tops. So the double top is basically just the opposite of the double bottom. Here we know the neckline is here and the double tops are there. So how do we trade it? We trade it like this. We are going to enter our cells. Sorry, I think instead of putting the cell here, I put the buy. Sorry, you can just delete that and put the cells. Yeah, so your first cells will be here and your stop loss will be there. Your first TPs should be here. This is where you're going to enter your second entries. You're going to enter the second entries when there is a retest. If there is no retest, you wait. Sometimes it's okay, you're going to miss a few trades, and it's not always that it's going to retest. We've talked about the number of the types of the retests that can occur. We have the gap, the whatever, and all that, the overlap and all that, right? So that information, this is where now you use it. This is why you use that information. Trading is not just about getting one idea and you go to the market to nuke. No, you get all these ideas that you're learning and appreciate them on the new things that you're learning. Say, how do I incorporate the already existing knowledge that I have to these new ideas, right? Yeah, so I said you should ignore the buy. So you sell, first sell, your stop loss. Again, this is where you put your TP. Once there's a retest, you enter a sale. And you're going to put your TP by measuring the distance from there to the neckline, which should be equal to the distance from your entries to until wherever it's going to point, and that is where you're going to put your TP. Simple. So another one is the triple tops. 1, 2, 3. It gets its name from there. So we have price moving. First touch goes down, goes up. Second, then third touch, and it continues to go down. So now the neckline is here as usual, and that is where the triple tops are. So now how do we trade it? We aim at entering at this particular point. Once we enter at this particular point, stop loss just a few pips, and we sell. Our TP should be here, first TP, and our second TP should be equal to the distance from there to there. We measure from here to there. If it retests, we sell again and we put our profit targets there. We know how to measure where to put our profit targets with this kind of setup. So triple bottom is like this. We have the neckline there, and this is where 1, 2, 3. How do we trade it? Simple, guys. Just the opposite of the triple tops. So your stop loss, just a few pips there. Buy, TP, another buy once price retests. And how you're going to put your take profit for those second buys, you just measure the distance from here to there, from the neckline to your first buy entries. You transfer it from the neckline to this area, and boom, that is where your take profit is. Very easy, guys. Let's talk about the head and shoulders. This pattern is called the head and shoulders. It is called the head and shoulders because it has this head, the right shoulder, and the left shoulder. So now this one, since it's going up, it is called the inverted head and shoulders pattern. So how do we trade it? We trade it like this. Our aim should be to enter at this head, but most times people don't actually know to say it's gonna be like this. So what most of the people will do is, unless of course if you're experienced like me, but don't worry, I'm gonna teach you how to look at price like whereby you even know to say it might form a head and shoulders. You might think it's not possible, but once I teach you that technique, then you're going to appreciate, you're going to know why I'm called the best trader in Zambia. Yeah, because how I look at price is basically not like how ordinary traders look at it. And that is the same skill that I'm going to put in you. That's the same skill I'm going to invest in you. I'm investing in you. And I feel so damn happy that I'm investing in some people. So your first time you're going to buy, your first entry should be here. So you should be aiming at having an equal side of the right shoulder to the left. Once price is there, you enter a buy. Your stop loss should be there. Your first TP should be on the neckline. Always remember neckline, because we have situations whereby it fails to break the neckline. That is why you put the first TP. Fails to break, but if it breaks, you buy again. And how do you put your TP? You measure from the neckline to the head. That distance, that is the one you take from here until wherever it's gonna reach. That is where your profit target is gonna be. Yeah, the head and shoulders, just the opposite of what I've spoken, and this is how you trade it. Stop loss, just a few pips above your entry. You sell, another sell. Your profit target, you measure the distance from the head to the neckline, should be equal to the distance from sell entry 2 to this level, and you're going to know where to put your TP. So again, if you want to put the stop loss, if you enter like this here on the same sell entry 2, you're going to use the method that I showed you in the double top or the triple tops, whereby you find the equal distance, the equilibrium distance, distance from the heads to the neckline. Once you find it, then just a few pips above, you put your stop loss. So apart from that, we have this other pattern, and really we have discussed this pattern, and this is how you trade it, right? This is how you trade it. Yeah, stop loss there, you enter, sell, you sell again, and your profit target should be this, where the channel is starting from. That is where your profit target should be. Others will get the distance from here to there. You can use that as your second profit target. Yeah, same principle here. I'm not gonna spend most of the time, Then the continuation patterns, we have the symmetrical triangle, and this is how you trade it. Once price is like that, you put your trend lines properly, and if you see that it is making this kind of pattern, you can anticipate, you can know to say price may either break out or it may continue. So this is how you're going to do it. Ne? So if price is on an uptrend and it starts consolidating and it gives you a symmetrical triangle, just be aiming at buying from these levels, from this lower trend line. After you buy, you hold all the way up. Ne? Yeah. How do you put your TP? You measure the distance from here to there. Then you come and measure from here to there. Right? Yeah, like this. The distance from here. Then you take the same distance from there to there. You put your first target at this particular point where the trend line started from, and the second take profit where this the distance that you've measured is. Yep, same principle applies to this one. If price is on a downtrend and starts consolidating and it shows you this, just know should be aiming at selling at this particular point. Yeah, once it retraces, you sell again and your profit targets like that. Very easy. Yep, so that's another pattern that we have. That should be a wedge. Oh, no, yeah, that should be ascending triangle. Yeah, so ascending triangle, basically, it looks like that, and this is how you trade it. Yeah, basically the retest or the risky trade here, stop loss just a few pips below, your profit targets just like that. So basically, guys, that is it for now, and that was it for this lesson. That was a recap. Now we have to see these things working in the markets. We shall learn about them once we learn the very basic market structure in the next lesson. Thank you so much, guys, and I'll see you on the other side.